I will be explaining logical market structure in the best possible way without taking much of our time. Hi trader, welcome to Adekunlefits. Today I want to explain to us what market structure is all about, and in a very logical way, because it won't just be about break of structure, higher high, higher low, higher low, the little trick behind that. Please let's wait till the end so that we can get this and understand it. Okay, when we are talking about structure, we all understand what structure is. It is the formation of candle that gives us bias about the market direction. So let me start with the bullish structure. So bullish structure, I don't want to take much of our time. We should understand that when we are in an uptrend, you see, market break structure, so it moves. You should understand that once this liquidity have been taken, because one thing we should understand that is that before market can move either up or down, it must always take liquidity. It is the liquidity that fuel the market to move to wherever direction it's going. So once market take liquidity and we are in another run, you understand, we are in another run, you should understand that after market have break that structure, that is, you are in a new run now. So you should know that the low that this market created, it will be liquidity. This low will serve as liquidity, and you should understand that before you can know whether this low is liquidity, is that you should understand that there is unfilled order here. When I'm talking about order can be anything. For example, it might be order block, it might be mitigation block, breakout block, rejection block, weak, anything. It can be anything. All those your POI, they are the places whereby markets will want to fill order there, because there are people waiting to buy from that place. So you should understand that once there is any point of interest below your liquidity, you understand, when there is a low here and there is another point of interest here, you should know that this will serve as liquidity. So at times market tends to keep going and respecting this low like this, because many people will think that that's how it is, and you should understand that market will always come down to look for a empty point of interest here for the market to fill the order before it keep going. How do we know whether it's a liquidity point? First and foremost, you should understand and look at this. You can see this trend line, because some people have the belief that markets will be going like this, like it has become pattern. So some people, that's where you understand that if you are trading structure, if you understand trend line and other strategy as well, because you understand that, look at this is trend line, and all this trend line, they are what? They are liquidity. You see, those that are trading trend line, as this market break here, they will be looking for retest and drop. You understand? So you, without even looking at this, you should understand that this is liquidity. So here we are going to look for any possible POI here, and we keep buying. That's structure. So some people just look structure in this manner, something like this: break of structure, new high, break of structure, new high, break of structure, new high, break of structure. That is, it gives us new high. But market doesn't work that way. Truly, market respects all these lows. You see, they are not invalidated. All these lows are being respected. You see, they are being respected. So that's to tell you that we are in an uptrend, we are in a bullish market. But underneath, before you can see all these reversal here, that is where all this little liquidity will form. But many people tend to forget that there are hidden POI here. So because it's going like this, it's moving up. You see the way let me use this example. You see it respects all this low, it respects all this low. So some people don't see the, no, this is just the bigger picture. They don't see all this minor structure here, as they tend to see it as original structure, which is not. So for instance now, you should know that here there might be some little structure here, somewhere around this place. So it will always happen like this. So market will come to take this liquidity. You should get my point here, because normal it will always be higher high, higher low, higher high, higher low, but in regard to which structure, you understand? You should try and identify. You see, liquidity is one of the things you should understand. You see, we have different liquidity, but let me give you another liquidity. It might be trend line liquidity, it might be double bottom, you understand, or equal lows. I don't know, market will keep going like that. See, these are liquidities. It's also liquidity. So once you see market create another break structure, that is break of structure, and then you see trend line or double bottom, you should know that they will serve as liquidity point and market will always take them out. So those are for uptrend. So for bullish market, now bearish structure, I'll just use this inverse scale. Just imagine what all I've explained earlier. Now imagine it here. You see market seek for liquidity here, it breaks structure, then it creates another high, but there is a POI here. Maybe it is hidden or physical. You just have to identify your POI. So and you see this trend line, we have different trend line, to be precise. But as for this video, just to let you know that any form of liquidity that you understand, so you should understand, this is liquidity here. You can see this structure. So market will always come above to seek that POI. So that's how it is. So let me draw another. Let me delete this. I want to draw proper structure now. All I'm explaining earlier is just for you to understand how the market seek for liquidity and structure, how it's being formed logically. But I will just plead you to always look for this kind of structure anytime you are trading. You see, once there is a low like this, a market take the low out, you understand? So it creates a break of structure. A market creates any high like this. Just know that based on what I've explained, it might be multiple highs like this. It might be multiple high. Just make sure that once the market is coming, you should seek for the extreme POI, extreme with confirmation. Nothing is certain. So this will be our liquidity point. Some people might be looking here for as liquidity. Yes, it's also liquidity, but if you look very well, you will see that, I will show you also in the chart. All these places have been mitigated, mostly because this is not a chart, this is just a diagram. You understand that most time all those areas will have been mitigated. There won't be a reasonable POI there. But as you looking for setup, like because you believe this place is liquidity, you will just look for new, we look for new POI that doesn't relevant here, and you put it out like this. And do you know the worst case? Markets will react to that. Markets will come like this. Market will come, react, and then break before moving. You understand? So this is how to fuel liquidity. And another kind of liquidity you should look at is one is still the same thing, like this. Take liquidity. And you see that markets have formed this liquidity points for us now. It might be like this. This is when I'm talking about double bottom. You understand? And then we expect market to break. You understand? As normal movement. But market fails to break. You understand? As market fails to break this one, you should know that there is something significant there. You should understand that these points will also serve as liquidity because market will take it out. If you are trading any setup or any strategy, they all works even if you are in a wrong direction. You see, some people might be seeing this place as sell, a lot to discuss, but some people might be seeing this as sell. So it will break depending on the type of formation that appear there. It will respect that, but believe me, it will take them out. It will take them out because they are in the wrong direction. They might see maybe structure forming here in the wrong direction, so they will be expecting to keep selling to this low. Yes, but because they are in the wrong direction, market respect that zone, but use that opportunity to continue in the right direction here. You understand? Which means this will serve as liquidity point, and you should be looking for entry here. You should be looking for entry here. So that's how it is. I believe you understand these two structure that I draw. So this is how markets move. Let me redraw this too in a very simple way so that it won't cause confusion, but I will still have much time to explain it in another video. But with this, I think we should get at least the idea I'm talking about. So where are these two structure? The first structure is like this, that is strong low. Market creates strong low, move to the upside, come back, take liquidity. And the second one is this, create strong low, come back, and then break structure. So let me just tell you now in a simple way. When we are talking about strong low, don't forget in my previous video I've discussed about strong high and strong low. So these are strong low. You see, after we have this strong low, we should expect, and market move to the upside. So this will be our liquidity point. This will be our target. You have to respect that target, you understand? Except you are good very well and you know another place to look for entry, So this should be our, there will be some kind of POI here, you understand? It's just based on assumption for now. So this is how you should look at it for the first structure. And the second structure is this. After our strong low, market fails to break this high. You understand? You can see that, and then it reverse to take this as liquidity. And don't forget that as market disrespect, like respect this high, that means so many people are looking for sell here and they believe it will break this low, but because you have this information, you just do what? You will use the opportunity to target this place as your exit point and look for entry, any POI around this place, and then target that high. So one of the things you should understand that whenever market did not break any low, you see here market doesn't break this high, right? You see how I draw it. Now look at this place as well. That's a logic for you. What are you saying here? So anytime you see market behaving like this, even you are in the right direction, the previous high will be broken. Even if it is from the sell point, the previous low will be broken. You see this one is broken. You see this one is also broken because look at how it forms here. It should be broken here. Look at how it forms here. It will be broken here. So that is the two ways to look at structure. And now our bearish view. This is the bearish view. Still the same thing. You understand? You take a strong high, it creates high, it serves as our liquidity, and then come to a very valid POI. Then we take our sell. The same thing here. Strong high, liquidity, sell. So let me just give us example of what I'm discussing so that we will understand better. Look at this place. You see, market take this liquidity, it breaks structure, this reverse and serve as our liquidity point. So our target will be here. Once the market come to our POI there, our target will be here. So our POI is here. Do you see it? So what will be our target? Our target will be here, and our stop loss will be underneath. Do you see that? That's what I'm discussing now. So let's look at another example. Now this serves as another what? Taking of liquidity, break high. You understand? So all this place will be our liquidity point. But I want you to look at something here from the bigger picture here. You will see that there is no you should be expecting this place to be our POI, right? Point of interest. But you should know that if we go to the lower time frame, there will have been some confirmation or minor POI that gives us direction towards the upside. Why? Look at this place. You see market is respecting, break of structure, we should expect another break of structure here. You see this place, we should expect another break of structure here. But what does market do? It gives us reason to go back. What do I explain earlier? You see, this is an entry point. It did not break. You see that point? So that means we are going to look for entry here. Let me go to 4 hours. Maybe I could see that very well. Because of this, do you see what market did? See, this will serve as our here. You know, break of structure, create high and come back. So this will be our target here. This will be our target, you understand? And we look for POI around here. You can see that's our POI. So you just take your entry from this place and target that high. Here you target that high, but because we are in a daily time frame, we know that you see where we came to see entry here after some confirmation. It's not that we just take it here immediately. So with that, we should know that we are looking at the bigger picture. This is where will be our total target. Do you get the point? So our TP will be there. So that's how it is. That is how it is. So let me give you some example on the bearish market as well. This is a bigger time frame, higher time frame, whereby you can see multiple trades there. So let's give another example. Look at this place. Strong high, it creates another high here. It serves as our liquidity. This place would be our target. So if we look very well, there will be, okay, let's look, this is our entry. Okay, that also serves as that place is an POI, but because we are not in a lower time frame, we couldn't see the confirmation. I don't want to go to the lower time frame, but on the norms, I will choose that place as my POI. I will choose that place as POI because it's valid at times. So, but I will need confirmation there. So let's assume that it works that way. So it now serves as our liquidity. On the norms, I will just enter here. I know I now hit stop loss there. But if it works, this will be our target. You understand? From sell side, you understand? So because it hits SA now doesn't mean it doesn't work. That's why I just have to stick with my plan. Sure you get? So it is what it is. So I think with this little, we should understand what structure is all about. And I want you to understand that there is difference between break of structure and change of character. Yes, there is difference between break of structure and change of character. Let me try and explain that. So when we are talking about break of structure, is a situation whereby we are still in the direction that we are going. If we are bullish, market is bullish. You understand? Market is bullish. I will show you all the break of structure that we have here. You understand what I'm saying now? Look very well here. Market take liquidity here. That's our break. That taking liquidity. It break like this. You understand? So after market have taken another liquidity here, it is the previous high that market is going in the direction. That's where our break of structure is. You see, market came back to take liquidity. The same direction that the market is going is our break of structure. You see, as market is breaking those high, that is, market respect our structure. So that is this low is not invalidated, it's still respected. This low is respected. This low is respected. You understand? So look at these two lows, how they have been respected. But now market break this. This is our change of character. But wait, because markets have break this low, at times you don't just assume that markets have break structure. You understand? We have change of character. But if you know your game very well and you are dealing with higher time frame and you know that you are in a very key, in a very an important level, you see, after market have created this, it creates high and still break again. That's a confirmation. So what do? We look for point of interest here and take our entry with confirmation from lower time frame here. You don't just take entry here, you have to look for confirmation before you can take those three. And then here will be our target. You understand? Leave how long market is going. So and then market will continue in the same circle that is going. So it can now keep going like this again. It will now keep going like this. Do you now get my point? So that's the difference between break of structure and change of character. Please get this point very well. So it's very important, and you should always try to understand time frame alignment, because it is the time frame alignment that will give you opportunity to know what is actually happening. Because when you reach a very key level, you go to a very lower time frame and you see that the structure they align with your bigger picture. If they did not align, don't just take trade. Always look for confirmation before you enter a trade. It's very important. So in conclusion to my video, if you understand and master market structure very well, believe me, your bias will be good, your entry will be massive, and your patience will be amazing, because you know where market is coming to. So please, if you find this video helpful in any way, please try to subscribe to Adekunlefits. I have lots of stuff to give to you guys, but it will only work out if you can support this channel by you subscribing to the channel. Thank you very much. It's your boy Adekunlefits. Bye bye.